This is Financial Accounting 101, Chapter 5, Problem AP5-1A. We are going to use QuickBooks to solve the problem. Jensen Hardware Store completed these merchandising transactions in the month of May. At the beginning of May, Jensen's ledger showed cash of $8,883 and common stock of $8,883. Now we are going to set up the company in QuickBooks. So we are going to go to QuickBooks and click on Company. We are going to click Preferences. Here we enter the company information. After setting up our company, we are going to go on the Chart of Accounts page and we are going to select our accounts. When we create our Chart of Accounts, we have to enter our cash balance and we have to enter our common stock balance. Next, we go on to our customers list and we set up our customers. And after setting up our customers, we will also set up our vendors. So we go on our vendors list and we do set up all our vendors. From here, we are going to go on our banking, more, journal entry. We open our journal entry page. Now we are ready to journalize. Our first transaction is on May 1st, purchase merchandise on account from Vanco Wholesale Supply for $8,700, terms 210 and 30. First we select the date. It's going to be May 1st. We select. We are going to debit our merchandise inventory account. Amount is $8,700 and we are going to credit our accounts payable for $8,700. We are going to select the company's name, Vanco Wholesale Supplies. On May 2nd, we sold merchandise on account for $5,600, terms 310 and 30. The cost of the merchandise sold was $3,664. We are going to set our date to May 2nd. Our account debit will be accounts receivable. The amount is going to be $5,600 and we are going to credit sales for $5,600. On our accounts receivable, we have to choose our customer name. To record the cost of inventory sold, we are going to debit cost of goods sold for $3,664 and we are going to credit our merchandise inventory account for $3,664. On May 5th, we received credit from Vanco Wholesale Supply for merchandise returned $600. We set the date to May 5th. And we are going to credit our accounts payable for $600. And we are going to debit our merchandise inventory for $600. We have to also select our vendor, who is Venco Wholesale Supplies. On May 25th, we purchased merchandise from Fasteners Inc. for $888, terms 310 and 30. So the date is May 25th. We are going to debit merchandise inventory for $888, and we are going to credit accounts payable for $888, and we are going to select our vendor, Fasteners Inc. On May 27, we paid Strickler Distributions in full, less discount. We had $2,700 the merchandise. We take the 2% discount, that gives us $54. So we are going to take the $2,700 and deduct the $54. So we are going to get $2,646. So our transaction is going to be debit accounts payable. The amount is going to be $2,700. We are going to credit cash for $2,646, and we are going to credit our merchandise inventory account for $54. We have to select Strickler Distributions for our vendor. On May 29th, we made refunds to cash customers for returned merchandise in the amount of $146. The returned merchandise had cost $100. So this is going to take two transactions. The first transaction, we are going to debit sales returns and allowances. The amount is $146, and we are going to credit cash for $146. The second part of the transaction, we are going to debit merchandise inventory $100, and we are going to credit our cost of goods sold for $100. On May 31st, we sold merchandise on account for $1,421, terms in 30. The cost of merchandise sold was $922. The first transaction we have to do is we're going to have to debit our accounts receivable $1,421, and we are going to credit sales for $1,421. We're going to choose our account receivable customer name, And the second part of this transaction, we are going to have to record the cost of inventory. So we are going to debit cost of goods sold, the amount is $922, and we're going to credit merchandise inventory, $922. After completing all the journal entries, then we are going to exit banking and we are going to go into the reports section, going to find the profit and loss statement and select it, select all dates, and we are going to run a report. This shows our company's gross profit, which is $3,753, and that is equal to our homework assignment, the amount in there. After our profit and loss statement, we are going to go on to our balance sheet page, and our balance sheet shows our total current assets, our total assets, that is $4,641, and our total liabilities is $4,641. So we are balancing. Our assets are equal to our liabilities and equity. The last thing we have to do is to calculate the profit margin ratio and the gross profit rate. Assume operating expenses were $1,555. I am going to go on Excel, and to be able to calculate profit margin ratio, we are going to use the solution, which is net income divided by net sales. So our net income is $3,753 minus $1,555, and divided by $12,703, that gives us 0.17. For our gross profit rate, we need to take gross profit and we divide it by our net sales. $3,753 divided by $12,703 equals 0.3. This concludes the extra credit homework for Business Accounting 101.